Welcome back to Investing Talk Podcast. Today, we're looking ahead, getting you ready for the upcoming Q3 2025 earnings from Mobileye Global.
That's right. We're analyzing the source material provided by one of our listeners, focusing specifically on what to expect.
And remember, this show runs on your suggestions, so please subscribe, like the episode, leave a comment. Definitely let us know if there's a specific company you want us to look into next time.
Okay, so Mobileye. Let's get into it. The target date we're looking at for the earnings release is October 23rd, 2025.
October 23rd, and what's the street expecting? What are the headline numbers?
Well, the current consensus is looking for earnings of about $0.08 per share, and that's expected to come from revenues around $479.9 million.
8 cents EPS, roughly $480 million in revenue. Got it. Those are the benchmarks. But the source material we looked at suggests there's a fair bit of, well, fog around this release, doesn't it?
That's putting it mildly. There's a significant lack of detail right now, which is honestly pretty unusual leading up to a major report.
Unusual how?
Yeah.
What's missing?
Well, a lot, actually. Specifics about the conference call or the webcast details aren't readily available in the sources provided. We're also missing broader analyst consensus beyond just that core Q3 number, like, whisper numbers or detailed estimate ranges.
Okay, so the context is thin.
Exactly. And things like historical surprise figures, how the stock typically reacts after earnings, specific technicals like implied volatility. None of that is detailed in what we have.
Which explains why the overall leaning is just neutral, I suppose.
Precisely. And it's why we've signed a really low confidence score here, just a 3 out of 10.
Wow, a 3 out of 10. That's basically saying it's very hard to predict with any certainty.
It signals high uncertainty for you, the investor.
Yes.
We know the trends are generally outlined in the recent corporate filings, like the 10Q from June or the 10K back in February.
Right, the official documents.
Yeah, but those immediate sort of granular details you'd want right before the Q3 numbers drop, they're just too sparse in our current sources to give us high conviction.
Okay, so the immediate run-up data is weak. Let's pivot then. How did Mobileye get here? What was the momentum like coming out of Q2? Because my understanding is that was actually quite strong.
Oh, absolutely. That's what makes the current situation a bit perplexing. Q2 2025, reported back in August, was fantastic for Mobileye. They blew past expectations, posted $506 million in revenue, and $0.13 adjusted EPS.
So significantly better than what's expected for Q3 then.
Yes, quite a bit higher on both counts. And it wasn't just the numbers.
What else drove that Q2 success?
It was about building the foundation. They locked in some key design wins, very notably their first contract for imaging radar, which is a big deal technologically.
Okay.
And they firmed up that huge partnership with the Volkswagen Group for ADS integration. That's the Advanced Driver Assistance System.
VW deal, right? That seems significant.
It is. Plus, they were making headway on prepping for U.S. robo-taxi pilots. So Q2 looked like a company firing on all cylinders, really executing its plan.
Okay, strong operations in Q2, clear progress, but then September rolls around and things get choppy, volatility picks up. What happened there?
Yeah, September introduced a major conflict, and it wasn't really about Mobileye's core business, interestingly enough.
Go on.
It was Intel, their parent company. Intel conducted a secondary offering. They sold 50 million Mobileye Class A shares onto the market at $16.50 per share.
50 million shares. That's a lot of supply hitting the market. Did Mobileye get any cash from that?
No, that's the key point. Mobileye itself received zero proceeds. This was purely Intel selling down some of its stake.
So Intel cashes out a bit, adds shares to the float, basically diluting existing shareholders right after Mobileye posts great results. That seems odd.
It definitely sent mixed signals, and you saw that in the stock price. But here's the countermove. Almost simultaneously, Mobileye initiated its own share repurchase program.
Oh, really? So Intel sells, Mobileye buys.
Exactly. Mobileye announced plans to buy back about 6.23 million of its own shares.
Okay, that sounds like a tug of war. What was Mobileye trying to achieve with the buyback then?
It was pretty clearly an attempt to soak up some of that new supply, stabilize the share float, cushion the blow from the Intel sale, and importantly, signal to the market that they believe their shares are undervalued, a commitment to shareholder value.
So you have this real tension, strong Q2 operations, then the parent company selling shares and the subsidiary buying them back. No wonder analysts are debating the valuation.
Precisely. You see fair value estimates cited in the sources around $19.67 per share.
$19.67.
Yeah, but the stock itself has been trading down in the low to mid-teens after that Intel offering in September. There's a gap.
Which makes this upcoming Q3 report on October 23rd even more critical, I guess. It's not just about hitting that 8 cents EPS.
Absolutely not. It's about providing the operational evidence to maybe start closing that valuation gap. The market needs reassurance.
So what specifically will Wall Street be looking for beyond the headline numbers in this report?
Okay, focus is going to be laser sharp on a few things. Sustained gross margin improvement is huge. Can they maintain or grow their profitability? And, crucially, execution on scaling those big partnerships, like the Volkswagen one. Are they delivering?
And in terms of specific metrics within the report, what should listeners track?
I'd say watch three key things. First, IQ chip volumes. That's their bread and butter. Volumes tell you about adoption by the car makers.
Okay, IQ volumes.
Second, those gross margins we just talked about. Expansion proves they have pricing power and they're running efficiently.
Makes sense.
And third,
Average selling price, or ASP trends. Is the ASP going up? That suggests they're successfully selling their more advanced and likely more profitable systems like Level 2 Plus, or even prepping for Level 4.
right, moving up the value chain. Got it. IQ volumes, gross margins, ASPs. Now let's pull back a bit. Beyond the Q3 numbers themselves, what are the bigger external factors or upcoming catalysts we should be aware of in the coming months? Well, the big overarching theme is always the road to full autonomy. Mobileye keeps talking about fully driverless U.S. deployments by 2026. That timeline keeps the regulatory discussion front and center. Any progress there is a major potential catalyst.
So the regulatory environment is key long-term. What about shorter-term events?
Near term, besides the Q3 earnings on October 23rd, there are a couple of dates to circle. Around November 28th, you often have estimated S&P and other major ETF rebalancing.
Index rebalancing. How does that affect things?
Well, if Mobileye's weighting in major index funds changes, it forces those big funds to buy or sell shares, sometimes in large quantities. It can definitely drive volatility.
Okay, so potentially forced buying or selling around late November. What else?
Then, looking towards year-end, around December 18th, you'll likely get the holiday automotive demand reports. That gives a read on the health of the whole auto sector.
Right, because even as a tech company, they're tied to car sales.
Exactly. They're still exposed to those broader macro risks, tariffs, global auto production numbers, consumer spending on big-ticket items like cars. Sector headwinds are real.
Okay, we've got the setup, the metrics, the external factors. Let's quickly touch on the formal outlook presented in the sources. What's the bull case?
The documented bull case is pretty straightforward. It hinges on continued innovation, especially pushing towards level 4 autonomous driving faster, and coupled with that, just strong, ongoing demand for those IQ chips, which could help them expand into new markets.
Pretty standard growth story.
Yeah.
And the bear case. What are the main risks highlighted?
The bear case focuses on, well, the flip side. Stiff competition. There are many players in the ADS and autonomous space. Potential regulatory roadblocks that might delay that 2026 driverless goal, and again, those broader economic uncertainties that could dampen global auto demand.
Competition, regulation, macroeconomics. Got it.
Yeah.
Now, for the really interesting part, perhaps the speculation, the rumors swirling around the stock that aren't official news but could seriously move the needle. What's the market buzzing about?
Okay, let's run through some of the high-interest ones mentioned. First, and maybe most immediate, is that Intel divestment question. There's persistent speculation that Intel might not be done selling. Could they do another secondary offering, reduce their stake further? That hangs over the stock.
So more potential supply from the parent company is a key risk people are watching. What else?
On the positive side, there's hope for regulatory acceleration. What if U.S. authorities grant wider testing or even commercial deployment rights for their Level 4 Mobileye drive systems sooner than expected?
That would be huge, obviously, pulling forward that 2026 timeline.
You would fundamentally change the revenue projections, absolutely. Then there's talk about new OEM alliances.
More partnerships.
Yeah, the buzz is that they might be close to securing another major contract, perhaps with a big Asian or European automaker. Landing another one like the VW deal would add massive forward revenue visibility. Investors love that.
Makes sense. Any other big rumors?
The final category is always tech collaboration. You constantly hear whispers about potential joint ventures or deep technology licensing deals with, the giants, maybe an Apple or a Microsoft.
The big tech angle.
Given where companies like Apple and Microsoft are exploring in automotive or complex software platforms, Any confirmed major tie-up with Mobileye would be seen as transformative. Huge validation.
Okay, so Intel's moves, faster regulations, new OEM deals, or a big tech partnership, those are the big speculative catalysts to watch. So, wrapping this all up based on the sources, it sounds like we should brace for volatility around the Q3 results, right? Driven by the numbers, partnership execution, regulatory news.
That's the picture, yes. Near-term volatility seems likely. For anyone looking at strategy, the sources suggest focusing on whether Mobileye can keep expanding those gross margins. That's really the key to long-term value.
And managing risk.
Well, any directional bet needs to account for that potential volatility. And maybe consider hedging using broader auto or tech sector ETFs to smooth out some of the company-specific bumps, especially those driven by external factors like Intel.
Which brings us right back to that core tension, the final thought we want to leave you with to consider. You have analysts seeing fair value up near $19.67, based seemingly on operational potential. Yet the stock price is considerably lower, weighed down by the parent company's actions.
So the question you need to keep asking yourself is, how much of Mobileye's current market value truly reflects its own technology, its execution, its future prospects, and how much is just noise stemming from the financial decisions being made by Intel? Untangling that is key to figuring out the opportunity here.
A fascinating puzzle. We'll be watching that October 23rd report closely. Thanks for tuning in.